Hello dear traders, you are watching a recap of the Asian session on September 20. Most stock indexes declined early Wednesday. After the end of the US session, Japanese, Chinese and anti-Indian markets posted red figures. WTI crude futures also fell for the second session in a row. Nevertheless, WTI and Brent are trading near 10-month highs. Expansive oil stimulates inflation and sets the stage for central banks to keep interest rates high for a long time. Notably, the European Central Bank increased its key rate by a quarter point on September 14. The ECB officials noted that this was likely to be the last hawkish decision and a pause should follow. The Reserve Bank of Australia also saw 4 pauses from June 6 to September 5. However, the minutes of its last meeting pointed to the fact that a rate hike was on the agenda, but a pause was a priority. Investors wonder how the Fed may steer its monetary policy over the next 7 weeks. Markets give a 99% chance that there will be no rate hike on September 20. The Fed has only decided to take a pause in its tightening cycle once this year in early May. However, soaring oil prices may adjust these plans, as the Fed's officials say that future interest rates will depend on incoming economic data. Thus, markets will keep a close eye on what Jerome Powell has to say today. At the same time, the markets accepted that the U.S. regulator may increase the key rate. Yesterday, U.S. Treasury Secretary Janet Yellen said that economic growth should be slowed in order to bring inflation back to target. In other words, she hinted at another rate hike. U.S. Treasury yields are rising on these statements, supporting the U.S. dollar, and thus 10-year U.S. Treasuries reached the highest level since 2007. Most likely this allows the greenback to remain above 105 points, despite the fact that it was under heavy pressure during the last 2 sessions. At the beginning of Wednesday, the U.S. dollar index was moving sideways in a narrow range of 105.00 and 105.20. In addition, the resilient U.S. economy continues to beyond the greenback, which makes it possible for the Fed to maintain a hawkish stance for a long time. Nevertheless, the U.S. dollar index is trading in a downtrend early Wednesday, ahead of the news from the Fed, and the index may drop from its current level of 105.10 to the support of 104.40, the weekly low of September 11. Meanwhile, the dollar index may reach the resistance of 105.40, the monthly high of September 14. While waiting for the Fed's decision, currency markets are mostly stable today. However, the yen fell out of the general trend in Asian trading. Today, the dollar-yen pair saw comments about possible intervention in the forex market. On Wednesday, Vice Minister of Finance for International Masato Kanda said that excessive volatility of the yen's exchange rate was undesirable. The official added that the Japanese authorities were in a close communication with the United States and other foreign counterparts on currency issues. This means that Japan is ready to intervene. And Janet Yellen also spoke about the possible intervention by Japan. Asked whether Washington would show understanding of another yen buying intervention by Japan, the U.S. Treasury Secretary replied that it depends on the details of the situation. And the yen has lost 11% against the US dollar this year on expectations of a continued high interest rates in the United States and the low interest rates in Japan. At the end of the last week, the yen strengthened to a 10-month high of 147.95. Early Wednesday, the yen broke through the level of 148. On the daily chart, the dollar-yen pair is expected to rise within the range of 147.60 and 148.20. Considering the fact that the pair has been rising for the past few days, the pair may reach the psychological level of 148 today. There seem to be a lot of the yen sellers in this area, so we may see the pair rise to the resistance of 148.80 and the psychological level of 150. At the same time, the bearish scenario is unlikely to occur, considering that US Treasury yields are at a multi-year highs. The strong yen and higher energy prices dragged Japan's imports down by 17.8%, and this was the biggest drop since August 2020. Japanese exports also contracted to minus 0.8% amid weak demand from China. Sales to Taiwan, South Korea, Singapore and Australia also declined. Importantly, sales to Russia fell by 57.6%. At the same time, sales to the United States, the Eurozone and India increased. Motor vehicles and cars, electrical machinery, semiconductors and microchips led the way. The antipodian currencies faced a very volatile trading session on Wednesday. The Australian dollar rose to 0.6466 after a series of sharp ups and downs. In anticipation of the Federal Reserve's decision, the Aussie is trying to grow within the daily range of 0.6448 and 0.6469. Meanwhile, the Aussie is losing ground against its US counterpart on a speculation that the Reserve Bank of Australia may have already ended its rate hike cycle. The New Zealand dollar is also trying to maintain its yesterday's growth against the greenback. However, the forces in this pair are very uneven. Despite its growth, the Kiwi is still below yesterday's high of 0.5953, trading near 0.5945. The New Zealand currency closed the Asian session trading rising within the daily range of 0.5932 and 0.5955. Markets also expect the Reserve Bank of India to intervene in the currency market. After the Indian rupee rose by 0.08%, it's trying to break the greenback's winning streak, which began on September 12. During the Asian session on Wednesday, the pair was trading near 83.10. However, high US Treasury yields may force the pair to break the intraday high of 83.30, followed by the psychological level of 83.50. A further rally in the US dollar may be slowed by the Indian regulator buying rupees for the US currency in the forex market. Against the backdrop of high crude oil prices, this scenario is highly likely to happen. After all, the Indian economy is heavily dependent on energy imports. Moreover, rising oil prices are widening India's trade deficit. And that's all for now. Leave your comments below and don't miss our next video review. Remember that staying up to date is key to success in your trading. See you online soon.